How are you doing, everyone? Welcome back to the channel. If you are new, welcome. Before the video starts, as always, drop me a like, drop me a comment, only if you're finding value in my content. And if you're not enjoying it, hit the dislike button. Either way, it's going to help me out. But I wanted to make this video today because if you saw my Instagram, you guys will see that my way of trading has slightly changed, okay? Personally, between me and you guys, watching my content, I feel as if I was almost leaving money on the table, okay? I felt like my strategy needed refining, which is okay, but what's not okay is to completely strategy hop every single week. That's not going to get you any money. But if you feel as if you need to refine your strategy and make better, that is okay. And that's what I've been doing behind the works, behind the scenes. I've been working very hard, back testing, putting in a lot of data to refine and build this strategy that is based off smart money concepts, okay? So like I said, if you guys are following my Instagram, you'd see that my trading slightly changed, and this is where the video comes in, okay? A lot of you guys have been asking me to make videos on trend trading, okay? And this is the concept on how I trade. It's structure and trading with the trend, but by using order blocks and smart money concepts to basically find where the pullbacks are going to be within them trends. So if you see in the back of me here, this is the trade that I took, the UCAD trade that I took on Tuesday. I'm going to break down that trade, take you through the thought process, all of that good stuff, and also show you another trade that played out today on UCAD as well, but I never took the position. So let's go on to the charts and get on with the content. Okay, beautiful stuff. We are on the charts. Quickly, before I start the breakdown, this trade and the analysis and the breakdown was sent into the actual FX community. So if you want to get trade ideas, get potential trading opportunities sent to you, and actually learn Forex, learn actual Forex, head over to the link in my bio and join the actual FX Discord community. So with this trade, the idea is we're trading with the sentiment, okay? We're trying to trade with the trend, and like I always bang on, and everyone says, okay, it's trading with the trend. It's your friend, okay? It will always increase the probabilities, and as you can see here, we got tagged in. This was a buy limit order. We got tagged in by 0.1 pips. As soon as price tagged us in, pushed straight to break even, and we captured, it says 3.45 here, but it was a 3.5% trade. So let's go from the 1 hour time frame, okay? How did I find this trading idea, right? Looking at this price action right now, we're looking at the higher time frames. We're a day trader. I'm a day trader, so I'm not going to be looking at the 4 hour, the daily. The highest I go is the hourly to identify the sentiment of the market. So that's just the first thing you guys need to take from this, okay? What is the direction of the market? Are we ranging? Are we trending up? Or are we trending down, okay? If we're ranging, I stay out the market. The probabilities aren't there. I'm not trying to trade a range. You could sell at the top, buy at the bottom, but that's not how my method works. We need to identify a trend, okay? That's why the title of the video is going to be Trend Trading with Smart Money Concepts, right? So we've identified that this market on UCAD was pushing up on the hourly time frame, okay? We identified and established that our bias is we're going to be looking for buys. And this is something that's very important when you come to analyze your pairs in the morning. What is the sentiment of that market on the timeframes that you are trading, okay? So we see that the market's trending up. We're looking for buys. This is when I then scale down to my 15-minute time frame, okay? And I come onto the charts at 8 o'clock a.m. exactly every single morning. That's what time I trade. So it would have been once this candle got printed, I was on the charts, right? We can see that price has pushed up impulsively, right? What we identify as part of structure is we know that this area here is a higher low, okay? So we know that this is potentially creating a higher low to then potentially create a new higher high. So knowing that price has pushed and broken the previous higher high, so this area here is a previous higher high, okay? And in simple terms of structure and how trends work, if price never broke this area and never ended up making new highs, this would basically just indicate to us that the market is potentially reversing and is going to potentially push to the downside. But what we saw was a strong push to the upside. So when identifying order blocks or any areas where smart money is, how they like to call it, smart money, is you're going to see strong impulsive moves, okay? You're going to see candles with a lot of volume. Compare these candles to these candles here. They're small, okay? Here we've got a spike of volume. So this is something you need to know. When trying to identify the order blocks or identify where smart money is, you need to identify strong impulsive candles that is also breaking recent structure to the left. In the up trend example, it's breaking the recent higher high. In a downtrend, you want to see it break the recent lower low. So we saw this push to the upside, but all I was looking at was this price action here, and I could see no order block. And how we find our order block is actually very simple. It's the last, for an up move, it's the last down candle before a strong push up. So I couldn't see anything on the 15 minutes. This is when I then scaled down to my 5-minute time frame, okay? And you can begin to start to see things a lot clearer. We can see that we have an order block candle right here, okay? So you guys should know why this is an order block candle now. We have the last down candle before a strong push to the upside, okay? And look at the volume of these candles compared to these previous candles. These candles have a lot of volume in. There's no retail traders. Just to pull it basic for you guys, there's no retail traders that are pushing one 5-minute candle 10 pips, right? You need billions and billions of dollars or pounds or yen, whatever currency you guys are trading, to actually push the market. So we know, and I established to myself in the morning, that this area here is an area of interest for me, my point of interest, like some people like to call it, to look for price to potentially come back and mitigate the orders that are here. Prices pushed up impulsively because there was an imbalance between supply and demand, and there is also unfulfilled orders that price has to potentially or can potentially come back to fill. So what you guys need to understand, right, with this trade is if price, so what we had was the initial higher high, the new higher high made from this order block push to the upside. This is now our new higher high. What you guys need to understand, right, this price then pulled back, okay? If this area here then pushed to the upside and broke the previous higher high, this is just simple structure. This order block is no longer valid, or this order block does not have to necessarily be mitigated anymore. By mitigated, I just mean price come in and grab the orders, okay? So if we see this previous high, or if we in a downtrend see the most recent high or low being broken, in this example the most recent high, then this order block doesn't have to be mitigated. But what we saw was price traded in this area, okay? We call this fair value. This is just where I'm a retail trader, you're a retail trader, but this is how we call it. This is the language they like to use, and it's just the retail traders trying to get into the market and trying to predict where it's going, okay? So what we have here is we then have a build-up of liquidity. We have traders obviously buying at this, what we call a support. Traders then saw a potential double bottom here, or even a triple bottom, and thought, okay, price is not going to break this area. We have an area of support, okay? So what we then saw was price spike to the upside, but again, never broke the previous higher high that we had made, still validating the order block that has not been mitigated. So the process was, right, we were just waiting. We had a limit order set at the top of this key level. So we had our stop loss at 6 pips, and then we were targeting a 3.5%. And talking about the support, okay, what was going on here? There was loads of basically liquidity underneath, okay? Loads of traders were buying at this level, creating liquidity just above our order block, confirming or even validating our order block further, as there is money here, and as we like to know, this is a fake out, but traders call this a fake out. But what this is really doing, this is just grabbing liquidity, mitigating the order block to then push to the upside, okay? So I hope you guys are following. You're going to have to watch this video over a couple of times. There's quite a lot of detail in this, but just take a look at my screen, okay? Just see how we know that the 1 hour is trending up, okay? We then see a strong impulsive push to the upside, breaking structure to the left and making new highs. So we know that our uptrend is still valid. That is just simple structure. We're making new higher highs, and now what we're anticipating for or looking for is the pullback. And that's the same with any sort of structure trading. You want to trade at the end of the pullback, as we all know. And this was the area I was looking for, this order block, okay? I wanted to see this price get mitigated to collect orders and then continue pushing up. We then have a load of price action, load of retail traders trading in this area, and then what we created was liquidity just above our order block. Traders believing that this is a support, which it was. We then see price being manipulated. We see the fake out, taking all this liquidity or stop losses that is below this level, and then continue pushing, tagged us in, and then continued pushing to the upside. Okay, so taking a look at the second example, we're starting on the 1 hour time frame. We're identifying our trend. Okay, guys, we're identifying our sentiment and our trend. If price is ranging, we're staying out the market. So what we could see, UCAD, we're pushing up on the hourly. So this is when I then scaled down. So what we could see this morning, this was when I came onto the charts, 8 o'clock. I saw that price had created or began to create this strong push to the upside. Again, breaking structure to the left. Okay, we know that this area was then valid because we broke structure to the left of it. So these order blocks and trends need to or are going to be validated by seeing previous structure being broken. So again, in this example, in the uptrend, what we're seeing is the recent higher high being broken. This is the higher high, pullback, higher low, push to the upside, new higher high. So none of this candles have been printed, right? What I wanted to see was price come back and pull back to this order block that we had here, and it was actually refined on the 3-minute time frame, but it's this area here, as you can see the last down candle before the strong push to the upside. But what is different about this trade, and why did price never come back to mitigate the order block, right? Price never came back to mitigate this order block because the most previous new high, the most previous new high that we have here was broken. Okay, this new higher high was broken by this push here. Okay, I know it's very subtle, but this area and this candle did close above this higher high, telling us that this order block down here does not have to be mitigated. Okay, if this structure was never broken and price traded below this area, we could still have this order block as a validated area for price to come back to. But we never saw that. What we then saw was price push to the upside, make a new higher high, leaving behind a fresh order block that we see here. And again, why is this an order block? It's the last down candle before a strong push to the upside. Look at the volume of this candle compared to the other candles. Okay, it's large, meaning the concept behind it is that there's smart money in the market. Okay, so we see the strong push, the last down candle, price breaks previous structure, we then see the pullback, price wicks in to mitigate the orders, as we can see here, this wick here mitigating the orders and then pushing to the upside. Slightly longer video for you guys, but I hope you lot are finding value in this, and if you want to see more videos like this, just leave a comment down below, let me know that you are finding value in this. Please re-watch this again, as there's a lot of information in it, but it's valuable information and it's how we can trade the trend and find order blocks to basically look for the pullback. But again, if you have enjoyed the video, drop me a like, leave me a comment, and I'll see you lot in the next one. Thank you for watching.